Hi, everyone. Welcome to Analyze Your Trade, Episode 6 for October 3rd, 2017. My name is David Kosmeter. I'm the creator of TimingResearch.com, and tonight we will be discussing your trade ideas. We had 67 people submit up to 5 symbols each for this week's list, and you should be seeing the most frequently requested ones on the screen right now. I developed the show with Dean Jenkins of Follow Me Trades, and he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Well, thanks, David, for setting this up, and it was fun, brainstorming this. We talked about it for a couple months, and here we are at episode 6 already. And so this is a really fun show. I look forward to coming here and moderating and hearing different people's opinions, but ultimately taking a look at the trades that individuals are interested in and getting a variety of opinions on those trades. So we're going to go through tonight. We're going to try and get through at least the top 5. We're going to get as far into the list as we can. We're going to go fast. And but first we'll start with just an introduction of our panel of trading experts. And we've got a new person who's never been on the show before. So we'll start with you, Oliver. And I'm not even going to attempt your last name because I'll just slaughter it. But Oliver, take 1 to 2 minutes and tell us who you are and your organization and what you got going on.
Sure, I'm Oliver Schmalholz. It's a German name. I'm originally from Bavaria in Germany. Been in the US since the mid-90s and got involved in the fintech space in 2004 after I was not satisfied with all the technology that was out there. I constantly saw news events and regulatory filings affect my own stock portfolio. So since entrepreneurs like to solve problems, I figured maybe there's an opportunity here for a market niche that nobody else has covered. Built a system that brings in all the financially relevant news for US equities, analyzes it, tags it, puts it into a huge database, and then predicts the stock movement based on past behavior. So that's what we do. Started selling it in the hedge fund space, in the institutional space, and now also got into the retail space to make a much simplified version available to everybody.
All right. Well, great to have you here. And, you introduce yourself as an entrepreneur. My favorite quote is, because I'm an entrepreneur too. I've started a couple of companies and now I'm doing Follow Me Trades. And entrepreneurs are people who are willing to work 80 hours a week to get out of working 40.
That's well said. Absolutely.
Yeah, but I'm really interested in your approach and the analysis and the research you've done and bringing that to bear on some of the stocks that we're going to be looking at tonight. So that should be super interesting. Next up is someone I've been on the show many times with at Timing Research. And Neil, if you just let our viewers know, just who you are and what your company is and what your focus is.
Yeah, sure. I used to be a broker at a major firm right out of school, and during that time was fantastic because the guy gave us a lot of free lunches when the mutual funds came in and wanted us to push their products, and soon realized that
so there is a free lunch. There is a free lunch on Wall Street after all.
If you duck out right before he gives you the pitch, yes. And we had a guy that he did that. He was a millionaire broker, and he would just sneak in for the lunch, and he'd just leave. And we'd think, aren't you supposed to stay around for the pitch? And no, he would just take the lunch and leave every single time. But I couldn't do that because I was a rookie. But for all the listeners, that's what happens if a broker's pushing you a fund. It's because he maybe got a free lunch, and if he wants to invite you to a seminar, that mutual fund's going to pay for half that dinner or more. So anyway, realized quite soon afterward that it's not really an analytical game when you're a broker. It's a sales game, and they teach you to just gather assets. They tell you your job's just gathering assets. And for me, I wanted to be more on the proactive analytical side, because you want to make a trade, you got to call up 100 clients and convince every single one of them to buy that stock. And by that time, the stock has already moved. So I got out of that game, and a couple years later started doing this, and it took a lot of what I learned being a broker, sort of on the ins and outs of what you see in the news, and I write reports, what your broker doesn't want you to know. And I did pick up point and figure charting there, and I still use it to this day. I think it's just fantastic analysis with the X's and O's. We've timed every single crash, for over 10, 15 years using that analysis. And it's just great. And we recently, well, I'll talk about that later when we talk about the picks. And then I picked up the Ichimoku Cloud a couple years ago to do a little bit more fine tuning. So that's what I do, send out all the alerts to my clients 5 days a week. That's it.
Okay, good. And yeah, it'll be interesting because I use Ichimoku Cloud as part of my analysis too. So it'll be interesting to see how our opinions on various trades overlap or not, using similar but different techniques. Jim, no stranger either. You've been on Timing Research several times. We've been on together, even on this show. But for the viewers, go ahead and if you would.
What we do at the Option Professor is have DVDs that we have for education on strategies for using the options. And in this day and age, the options can be used for so many different things that it's important to have product knowledge, before you get into them. And, the calls, using them as hedges against short positions or replacement for long stock positions or selling calls to generate capital. On the put side, using them for insurance, using them for cash flow purposes in a rising market, and using them in a collar strategy to protect equity. There's a lot of different ways you can use these options, and if you know what you're doing in each strategy, you might be able to apply the right strategy at the right time.
Okay, great. So I think we've got a great lineup here, a lot of different perspectives, different ways to approach the market. So I think the viewers are going to get some real valuable insight on these top trade picks. We're going to go through, 4 or 5, and then we'll try and take some on the fly. So you're watching live on YouTube. There's a chat function. David is monitoring that, and he'll tell us if there's any questions. We'll try to deal with them, answer your questions, and take some picks on the fly. But we've got the starting list here that most people voted for, and the first one up here is NVIDIA. And so we're going to go through the panel, and we're going to go fast. So for the panelists, if you got a strong opinion on it, you got some analysis, some input, show us, try to make it quick. If you got no opinion or you think there's no good trade there, just pass on it, right? We don't want to belabor the point. But let's kick it off and start with you, Oliver. What do you think about NVIDIA? What do you see there?
Hey, Oliver, I think you're muted.
Here, now I'm unmuted. Yeah, can you see my screen?
Yep.
Here's a great example of a news event triggering really a move that lasted. Here in August on the 14th, we had a CNBC report on TV when Goldman said buy Netflix, NVIDIA, and other growth stocks, and saw a great 4.36% on the event day. If you look at the chart here, it has continued to go up since to over 11%. So that's the kind of triggers you can find if you analyze the news and sort out the noise from the pure market impacting stories. So that example is perfect how a mainstream media story can trigger a double-digit move in less than 90 days.
I don't think we're seeing a chart from you, Oliver. We're seeing kind of a file manager looking thing.
Oh,
is that what you wanted to share?
No, it should show the, how do I select a different entire screen? Right here. Yeah, that's the Goldman that was on 8:14 at 9:49 a.m. And on the event day, you see how it immediately jumped up 4% that day, and there was great follow through since then. We're still up 11% triggered by that news event. And you see, you don't have to be a high frequency trader to get in on those kind of moves. Even if you went in 30 days later at 0.5%, you could still have captured 3.5% in the day trades and then stay in for a couple weeks.
All right. Do you have any current outlook on NVIDIA, or are you just kind of looking at what did happen there?
It's not one of the triggers we have today. So about 97% of the news every day are pure noise. So there wasn't any event today that triggered a setup in NVIDIA, but I have some examples what was triggered today. We can talk about it at the end.
Okay, perfect, perfect. Neil, what do you got? What do you think about NVIDIA? You want to buy that stock?
Yeah, I'll just do a screen share here. No, I wouldn't buy it right now. Can you see this chart with the X's and O's?
Yeah.
Yeah, okay. Well, you got this big move up here in the X's from 166 to 190. It goes into O's, means it's falling down. And when it retraces more than half a straight move up, too many sellers came in. And it's really not what I would consider a buy on a pullback, because the pullback has just been broken too much. You get the big spike up and the move down. I wouldn't buy it here. Go over to the cloud as well. You can kind of see that up here. The big gap up, RSI over 90 comes down. I would get out if I hold it at 185 is the most I could see it go to here. But no, I'm not interested right now. It's not a good place to buy. Maybe in the future, but not right now.
Okay. Do you see a short on it at this time?
No, you don't want to short big, strong stocks like that. These are the strongest ones. Let's go to the day. These are the strongest in the market, and they're the last ones to fall. So no, not a short.
So no trade for you on NVIDIA.
No.
Long or okay. Jim, what do you think about this?
I think I concur with the last remark in that it ran up to the 190 area, pulled back to 170, back up to above 180. Now we're under 180 again. So it still looks like it's a bit on the defensive. The main thing that I'm seeing, let me just put this screen share up there real quick so they could see some data on that. Hang on one second here. Some numbers, that obviously will.
Yeah.
Can you guys see that chart?
Not yet.
Not yet? Hang on. Screen share. Well, at any rate, just to give you the numbers so I can give it to you, the 200 moving average is at 132. The stock's at 180. That's going to be about 40% above the 200-day moving average. That's kind of rarefied air for just about most all stocks. And that might be one of the reasons why when it went to 190, there was gravity taking it back down. So if I was an owner of this stock, my opinion would be to probably collar it and protect that equity a little bit because the upside may not be too much further than the 190. And the downside looks like 170 to 132, which is, it could be a little bit painful. But that's basically what I would be seeing right now, my opinion.
Okay. Well, I think I'm reasonably in agreement with what's been said so far. I'm showing a chart here on NVIDIA. What a marvelous trend it's been in, starting at the beginning, basically, of 2016. So nearly 2 years of a really strong uptrend. And my favorite phrase on a chart like this looks like a lot of tech stocks, is too late to go long, too early to go short. Now we are losing momentum, and what we do know is, trees don't grow to the sky. They're going to correct at some point, but it's too early to try and catch a short on this. I'd be interested in shorting it if it would break down through the Ichimoku cloud. But, for proof of a pretty good strong downtrend starting, we have to get down to about 153. And if it does, then we got a Fibonacci retracement zone from 127 down to 87 from the last highs. So again, too early to be taking that, but there is some sign of, if you look at this price oscillator, there's some signs of the momentum coming out of this trend, pretty mature. So it may correct at some point, but it's too early for that. And so I wouldn't be long, way too late to get long and too early to get short. So I think we're all in pretty much agreement on NVIDIA. What a great trend. Should have asked me about that back here. I would have loved to get long on it then. But yeah, way too late now. Well, the next one up is Alibaba, BABA. So let's go ahead and pull that up. And back to the top of the batting order. Oliver, what do you got on Alibaba?
Here, let me share my screen again. Share. Alibaba had a long trigger here in our system on the 18th of August here. Market Watch came out with a pretty strong article. This is the one stock to buy if the market crashes. Stock has since then gone up 8.58%. The volume is still at 30% higher than usual. So there still could be room to the upside until the next earnings date.
All right, driven up on news from August. Neil, what do you got right now?
No, I'm not too excited about it. It's got a massive market cap, 400 and something billion, makes it one of the biggest companies in the world. That's not the only reason. I'll just go quickly to the screen share. Oh, it was already sharing it, wasn't it? Okay. Go to a point and figure chart here. Yeah, point and figure chart. What you got here is a lot of times you get 3 moves to the upside. You notice here, we had that big column of X's like last time. It comes down into O's, but not as far, not quite half. That's a real pullback. And as you can see, it rallied from there. And now we're on the 3rd one. You might even want to go for a breakout at 182. But if you didn't get in back here, what you got to do is a stock, you got to say, if I was watching this stock, where would I have actually gotten in the last couple months? And if you missed that time, you got to monitor stocks better. And you can't make up for the wrong entry point unless you use a much smaller position. So I'll go over to Ichimoku Cloud. And yeah, even right now, you got this inverse hammer here and the gap up. So no, but if it breaks out a little bit above 179, you could go for it. You might not get much, but that's what I would do.
All right.
That's it.
So really no trade for you at this time.
Now, if you love it, go for the breakout at 179 with a stop real close, 177.5 or so, just below this little consolidation area. And you might be able to get something out of that or do like a maybe $3 trailing stop and then prepare to get stopped out, hopefully for some gains.
All right. Jim? What is your...
this stock is similar to the last stock as far as its overbought condition versus the moving averages. It's about 40% above its 200-day average. The difference is this stock has volume that's increasing on a 50-day basis versus a 200-day basis. It's about 35% higher volume on the 50-day average over the 200-day, which means, obviously the volume is picking up as the stock is picking up. And some people do think of this as a proxy for Amazon using a Chinese version of Amazon. So, 178 looks better than $1,100 or whatever Amazon's trading at right now. And so, that could give it a tailwind as well. But getting above that 180 mark would be a key for people who don't own it.
All righty. So I got my chart up here, and you can see this dashed light blue line here. We actually went long on Alibaba in January and took it up. So pretty happy about that. And what we saw was, using a simple Elliott wave, we initially had a big impulsive wave. This looked big back then, right? This move up to 110 had a perfect correction into a Fibonacci retracement zone. And when it then broke through the cloud, you can see right as it broke the Ichimoku cloud, we took a long, and there it went. So we're pretty happy about that. I think it's way too late to be getting in. This is a very mature trend, awesome trend. But I don't chase trends. I hate to chase trends. I don't try to catch a falling knife on the way down, and I don't take it to the sky, right? This thing over the last couple of years has gone from under $100 to almost, 180, and it's been a long time coming. It's starting to lose momentum. So there's no trade for me yet. There may be a correction coming in the future. It's too early for that, though. So we just enjoyed the trade we had. We're out of it. We took our profit, and we're not trading Alibaba right now. So what's our next one? Disney. Happiest place on earth. What do you guys think about Disney? And we'll go back with start with you, Oliver.
When they announced back in on September 7th, here almost 4 weeks ago, that the Marvel and Star Wars will go exclusively on the streaming service in 19. Stock took quite a dive here, down 5.29%. I think it's too late to get into that short.
Okay, so no trade for you on Disney right now.
No trade right now.
Maybe the happiest place on Earth, but not really the happiest stock chart on Earth, eh?
Not right now.
Okay. Well, we're not giving our viewers much here. We'll get them something. We'll find you some good trades. Neil, what do you think about Disney?
I agree too. Too late to short. If you look at the chart I have here, the short was right at that break of the cloud at 110, and so nope, nothing. Stay out. Don't trade these little mini rebounds just to try to squeeze a few dollars out of the trade. It's not worth it.
Very good. Jim.
Well, it does seem like it's trying to turn up a little bit here, and there's a gap between about 103 and 106. And it is, got the 50-day average at 102 and the 200-day at 107. And the volume has been increasing on a 50-day basis versus the 200-day basis by about 20% or something like that. So if you were going to try to play for a bounce here, that target zone of 103 to 106, something like that, maybe 107, could be a best case scenario. The chairman Iger was on Fast Money today talking about a bunch of new different things they've got in the pipeline, so that could get people excited in the next week or so. If the market continues to go up, this might tag along.
Okay. So I'm sharing my chart on Disney, and I just hate it. I just hate it, right? Because it has no structure. I look for impulsive moves, corrections, continuations, and what I hate is when I see a chart like this. It's just swinging around with no order, no pattern. It's very difficult to trade. And what I teach in my courses is the question isn't how do I trade Disney or NVIDIA. The question is, should I? And when I look at a chart like this, the answer is no. No, I should not be trading Disney because there's no order, there's no pattern, there's no predictability to it. There are charts out there that we can find, really orderly price movement, clear patterns that we can recognize and try to get a good trade, right? To get into a good trend or a correction or something. And so for me, the question is not how do I trade Disney, it's should I, and the answer is an emphatic no, right? Not at all. Now, we've been downers so far. We've kind of been thumbs down on all three trades that we've looked at so far. So why don't we shift the agenda just briefly and go through the order, and each of the panelists give us a trade you like, because people.
Yeah, you're getting me down, Dean. You're getting me down.
I know, right? So let's dial it up here. So people tuned in to get trade ideas, right? So we've dumped all over the first three. So Oliver, is there a trade that you do like right now that you'd want to share with the people
Sure.
watching?
Medical transport billing, MTBC, signed a pretty sizable deal here in 42 states. Stock went up on 100,000%, the usual volume. Very, very strong follow through here. That was at 3:26 p.m. here. I would expect the momentum to continue here.
So that was up 100% today.
140.
Tradable 53% when if you got in right after it came out. You can look at the first minute, it went up 8.56%. In the first 30 seconds, actually down 1.11%. So you didn't have to be super fast to take advantage of it.
And how did you find about that so fast? The report, your
So what we do is So every day we bring in between 5 and 10,000 news stories from various sources. It includes all the news wires, all the SEC Edgar filings. We have a media monitoring that monitors the 50 most relevant sources like CNBC, Wall Street Journal, Reuters, Bloomberg, Yahoo Finance, Seeking Alpha, and the likes. And we got our own proprietary algorithm that filters out the noise from the news that really moved the market. And 97%, like I mentioned before, is just pure noise. And we find you the 3% that are really relevant. So instead of looking at 5,000 news items a day, which would be quite a challenge to do manually, we bring it down to a manageable number where you can pick triggers that match your trading style and hold time. And typically our users go anywhere from day trader to 90-day hold times.
So I guess on a stock like this that a lot of people don't know about, if the news comes out, it kind of takes at least a couple minutes for the whole world to sort of figure it out, as opposed to Forex, where billions of dollars are on the line immediately, right?
It depends on the type of news. There is scheduled news and unscheduled news. That was a unscheduled event. Scheduled events are earnings events. That's when everybody knows, XYZ company will release quarterly earnings at such and such date and time. You can prepare for that, but the big money is really in the unscheduled news that comes surprisingly that you didn't have time to prepare. And the general perception, of investors is, I got to be a high frequency trader to really take advantage of it. I don't have, time to get in if I don't get in nanoseconds. And that is the perfect case here. Even if you took 5 minutes, you get in at 25% higher, but you still captured the difference between 25% and 53%. And that's what our system with the various machine learning and AI technologies that we've built in the last 10 years allows you to take advantage of. And on average, we look at 1 million data points a second, and we find exactly the triggers, the signals that move.
Okay. And what's the average amount per day, for someone that they would get from you?
Oh, it really depends. A lot of our customers don't want to take a super active approach. We do have strategies that allow you to get in at the close of the market and stay in for a month or 90 days if you're more like a swing trader or a position trader. And if you can compound it 30 to 50% annual returns, your account balance grows pretty quickly.
That's pretty interesting stuff. That's pretty cool. And you think there's still room to get in on MTBC right now, right?
But whenever you see, there's a direct correlation between the volume and the price impact. When you see outliers like this, that's a very strong indication of a high probable move that's going to last. Especially if you see mainstream media follow up on the story. That's when moves create a lot of momentum. That's why we implemented that media monitoring to look at all the important sources here. And typically it starts with a regulatory disclosure with a Reg D type of news that was through Globe Newswire. Then you see CNBC pick up on it, the Wall Street Journal, then Yahoo Finance. They're typically a couple of minutes late. And if you see one source after the next starting to jump on a story, that's when you see a lasting performance.
Very, very interesting. Well, Neil, have you got a trade? Can you beat this 148% in one day?
Naturally.
You got a trade you like? You got a trade you like, Neil?
To be honest, it's actually on the list. S&P 500. We got long that a couple days ago on the breakout at 38, and all of my indicators are saying go bullish. And I'll just give you a quick trick here. Well, it's not a trick. It's the best indicator I've ever come across ever, which I learned as a broker right before I left, thankfully. And I type in the word bullish here, stockcharts.com. It's a place to get it free, but a lot of systems aren't going to have it. I don't think TradeStation has it. Some of these bigger ones, I don't even have this. So it just, let me just check S&P 500, bullish percent. What it says on a scale of 0 to 100, what percent of stocks are on near-term breakout buy signals. And so I was actually telling people to stay away for about a month, as it was in the O's down here. And it turned up to X's just a few days ago. And so that means back here, only 64% of stocks in the S&P 500 were on near-term breakout buy signals, which, it's starting to go down. And the technicals, eventually the market's going to follow the technicals. If the market holds up while this is going down, what that means is that the mega caps are holding up the market. Microsoft, Google, Apple, those types of companies are holding up the market while all the smaller ones are crumbling beneath it. That's how every single crash happens. The small, lesser known companies fall and sell signals first. Everyone thinks everything's great. Next thing you know, boom, Dow's down 800 one day, 500 the next. Everyone says, where did this come from? You can always see it happening here in the bullish percent. So that's how we got back into we actually use triple leverage, SPXL. So yeah, SP 500, a little bit boring, I know, but you asked, so yeah, well, that's the answer.
Yeah, well, nothing boring about profit, right?
Yeah. So we actually use a trade calculator that I developed where you don't worry about the objective. What you do is you put in the price you're buying and you put in the stop point. What percent of your portfolio value can you handle being lost if you get stopped out? And so if you set that at 1% on the calculator of mine, you would have put 20% into this triple leveraged ETF. So your whole portfolio would have been up 1% in the last couple of days, which is not bad for the whole portfolio in a few days, And we actually had calls a few weeks ago on S&P 500 too. So that's a neat calculator. I can send everyone later.
All right. Very cool. Jim, you got something you like right now?
Yeah, well, like I say, I'm the content provider over at the Option Professor, so we're not, giving out particular stocks to jump into or options, but there's strategies we do suggest people look into, and we've been talking about these strategies for a long time, ever since the drop in 2015. A strategy like the credit put spread has been a fairly consistent moneymaker for the last 2 years and change. And while it doesn't make a ton of money like some of these other things you guys are talking about, consistently collecting the cash has not been a terrible thing for people. That doesn't mean it's going to continue because we don't know what the environment is down the road, but certainly the credit put spreads has been a pretty solid way to go in the last 24 months. With regards to the stock that was being talked about here, I just wanted to throw in a few questions. Maybe other people that are listening may have the same ones on MTBC.
Sounded like you said MTV there.
MTBC? The gentleman who was talking about that?
Yeah, I got it back up here on my screen share.
You're Oliver?
That's right. Yeah.
Okay, Oliver. So I'm looking at some statistics on here on my screen that I got, and it looks like it did 7.5 million shares today. Is that a number that you're seeing too?
7.2 million from the time the news came out. So we measured exactly from a tradable setup, the 5-day average from the same time. And again, we base it from the time of news until the end point, not just the daily average. So if news comes out at 10 o'clock in the morning, we take the volume from 10 a.m.
Well, it's about 10 times normal. It's about 10 times normal volume, right?
More than that. It's from the time of news, it was, let's see, over 1,000 times the regular volume.
Okay, because I'm looking at a screen that says something about a 50-day average of around 726,000 versus 911,000 200-day, which means the volume had been drying up a little bit. So obviously this news came a little bit out of the blue, huh?
Correct. That's why it's such a great example how you can profit from events like that are completely unexpected.
Now, with this, I didn't really hear exactly what was the news on it again.
Here, they signed a new talk EHR in 42 states here. It's a medical transcription type service. So 42 states, that's pretty significant. During the first months of rollout, that's a pretty successful launch. And if you look at the average daily range here, you can see typically the stock is in a 4.69% average daily range, and we had a 36% after the news came out. And the same time, the S&P only had a 0.04% move here.
But this is not a takeover. This is just good news for the company.
Good news for the company. That's correct. Yes.
Yeah, because those are dramatic numbers, you know.
Yeah, and it wasn't all you know, the big money. If you look at the average shares per trade, it's pretty consistent where it was trading. And on average, you see 186 transactions a day. You saw over 12,000 since the news came out.
And has this been around since late 2014?
Our product, actually.
Well, I mean, this company.
Oh, this company, I couldn't even tell you.
It looks like that's the case. Yeah. Okay, I just was wondering to clarify, because that's some pretty dramatic stuff. Obviously, it's had times where it ran up and then it ran right back down again. So you don't know exactly what the future holds on it. But today's action certainly is notable, huh?
Yeah, I mean, you're not going to get 100% accuracy on any strategy, but typically new strategies have anywhere between 60 to 75% accuracy rates, depending on the hold time. During the 2008 2009 downturn, I made a ton of money just with a 51% accuracy. So it all depends on how volatile the environment is, and obviously we've been in an extended up market here, and short positions go down a lot faster and don't last as long, just with the general fact that we're still in a extended up market here. But it all is going to change once we hit the next downturn. Sure.
This particular company went from 50 cents up to $4, back down to a little over $1, now back to $3.50. Actually, it says in the aftermarket it's at $3.75. Is there reasonings why this thing is back and forth quite a bit?
So
does it have good?
So typically the news cycle, the major events goes from earnings date to earnings date, unless there is some unexpected major news coming out in between the earnings dates. The key events for each stock, if you look at the yearly news cycle, are the 4 earnings dates.
So Jim, I'm gonna keep moving here. It sounds like you didn't have a particular pick you were looking at. Again, you positioned that you're providing training, generic training on.
Yeah, I mean, we're doing. I wouldn't say generic trading. I would say specific trading on specific strategies, and there's specific strategies that have been more effective than others, and they continue to be effective. And one of them has been the credit put spread.
All right, fair enough. So I got a trade here I'd like to share with the viewers, and it's on my screen here. It's a symbol SLCA. This is Silica Holdings. It's energy related. They make silica sand for fracking, for oil drilling. And what I like about this trade is, I base my analysis, the core of my analysis is Elliott wave. And we've got a nice impulsive move up here, an initial move, from under $15 to over 60. We had a really nice correction to that move. It went down pretty deep. It stayed just above. If it had gone below this 76.4 level, it would have disqualified it, but it found support there. And now clear evidence of the continuation of the initial trade, that initial trend is now presenting itself with some higher highs, higher lows, higher highs. I'll zoom in on that a little bit. as we can see it here. It's broken above the Ichimoku cloud. So we took an entry on this Monday, and we're up about 3% on the trade. We think it's got a lot of room to go. So we took an entry at 30.61, got an initial stop at 26.72 under the previous support level, and we got a price target on this of $54. So the reward to risk on this trade is phenomenal. You know, getting in here with a stop here, and you compare that ratio of that distance from here to up to $54, right? This is like a 5 or 6 to 1 trade if it hits the target. And quite often they absolutely do. This is a wave 5 Elliott wave trade, a continuation. Those are the most highly probable. And I like this one a lot. And our strategy on this, you need to just buy the shares, but we're also trading, you know, I propose an option contract on trades like this. We're taking a March 26 call on this one, which puts you deep in the money, high delta, and if it goes the way we think it's going to go, you're going to make a ton of money on that play. So that's one of my trades right now that I like a lot. Still plenty of room to get in. SLCA, US Silica Holding Corp. Let's go back. So, you know, we wanted to do something more than just dump on the trades we didn't like. So let's go back and see if there's anything we do like. Let's go.
Hey, Dean. Hello, Dean.
We lost Dean, huh?
Dean, are you there? Okay. I think he's having some audio problems. So let's just go ahead with next stock on the list, CMG, Chipotle. Oliver, do you have any opinion on that?
Yeah. Whenever you see another outbreak here, and the last one was here the end of July, it's always a great short trigger here. I mean, it has been happening over and over and over. This one was first reported at CNN here right at the market open at 9:30 in the morning, and in the first minute, it went down 0.5%. Ever since then, it has gone down another 14%. It might be a little late to get in now, but if you see another health issue here at Chipotle, those are always, you know, great shorting opportunities, and our system is able to, you know, alert you when those happen.
Yeah, I'm also bearish. Don't bother.
It's kind of oversold down here. You know, the 200-day average is up at 402. We're down at 302. It seems to me that if it got above like 320 or something like that, it could try to turn up. I eat there, so.
And you made the show?
I made the show. No, I mean, I go in there, the place is spick and span, everybody's getting great food, and the price is fantastic. So as far as I'm concerned, I don't see it. So, you know, I would not be somebody who'd be beating up a stock that's $100 underneath its 200-day average. And with a 17% short interest, it seems like it's getting a little crowded in the old botulism camp or whatever they're calling it. You know what I mean? But, yeah, I mean, obviously it's in a downtrend because it's been coming down like that, and obviously it has news that's not that stellar. But you know, you can't beat a dead horse forever, or maybe you can. But my feeling would be is there a possible turn here, because the 50-day moving average of volume looks like it might be as much as 30% higher than the 200-day, and the 50 days at 320. And that short interest up at 17% tells me there's at least a few people who could cover if things start to turn. But you'd probably want to wait to get a little bit of a turn before you jump in. It looks like it's trying to hold this 300 area, but trying and doing could be two different things.
Hey, does anybody have a query system where you can query a stock that has some near-term good technicals, but a tremendous amount of short interest as much as possible, so that all the shorts will eventually freak out and short cover? Oliver, do you know something of system like that. I guess Bloomberg could do it, but that costs how much a year? 20 grand?
24,000 a year, yeah.
Yeah. So.
Yeah, our system is entirely focused on news, but hearing all the other participants here talk about all the technical approaches just, reminds me how our approach is very complementary with other methods here and other systems. So you can easily, take a news trigger and then apply your own analysis on here. So if you've got a strategy that works and you want to further optimize it, put the news as an additional overlay on it, and your performance will be great.
So we're not buying the rumor, selling the news anymore, are we?
It depends what kind of news it is.
Okay.
All right. So, well, let's go on to the next one on the list, SPY. Oliver, do you have any?
Yeah, no opinion on that. We don't analyze ETFs. It's all company-specific news we analyze.
Oh, okay. And
I'll
Neil,
pick it up. Yeah, buy. We got in SPXL. I'll just do the screen share here. I thought I was on screen share. Maybe I wasn't. Okay, here we go. S&P 500. Yeah. Go for it. Bullish percent just reversed up. You can get in SPXL. Go for the triple leveraged. I think it's got more room to go. Yeah, I like it. The great thing about these triple leveraged ETFs now is you don't have to search through the needle in a haystack in different sectors for the best stock in that sector anymore. You just go for it with the triple leveraged stock. We did buy an oil stock, however, recently that outperformed the triple leveraged oil ETF, so it can be done. But if you're unsure, just go for the sector. And right now, I'm pretty bullish across the board here, so I'd go for it. Yep.
Okay, great. And Jim, did you have anything?
Well, I mean, the things broke out to new highs again this week, so obviously there still seems to be some gas in the tank here. And with all the supposed money that's going to be pouring in from tax credits and tax rebates and infrastructure spending and higher interest rates helping the banks, it just seems to be a lot of blue sky out there.
Yeah. That blew me away, what happened with the Fed. What was it, a week ago, where all of a sudden they did a complete 180 on rates and said, oh, no, we're going to start raising rates. Don't worry about it. I couldn't believe that. That had not happened since, how long now? Over 10 years?
Well, the most intelligent thing I've heard recently is Cubans saying that if they're going to get tax cuts and tax credits, they're going to have to sign affidavits that they're going to take the money and increase wages and increase jobs here in the U.S. Right. And although that document will never be signed, it sounded like a better idea than hoping they'll do it.
I mean, if you're going to use a fiat money system, though, I would support the higher interest rates, because otherwise you're paying the inflation. It's going to help some people. It's going to hurt other people. Some people prices will inflate everything out of their reach. I looked up just 2 days ago, or maybe yesterday, if you want to find out the real rate of inflation, just look up the M2 money supply. And you can find that, like, what is M2 money supply in the US? And I looked back, I said, what did rent cost 10, 15 years ago? And I looked up, and M2 has pretty much tripled, and rent has tripled in the last 15 years. It's really the only thing you need. And M2 is going up 5 to 7% a year. That's the real rate of inflation. Whatever the Fed says, it's absolute complete garbage. Absolutely not true at all. They will factor in a big screen TV, like a 60-inch TV, being cheaper and having more, bells and whistles than it did 5-10 years ago, and they will say that's deflation, and they will use it against the real inflation. It's just unbelievable what they do.
Well, if the word of that gets out, it's going to be a problem for the bond market, because there's only one door out, and there's 9 trillion zillion people who are going to come out of it.
Yeah, triple leveraged inverse bond ETF. I got to look at that. Maybe I was a bit, I got caught behind on that, but I was talking about that even 2 years ago, the end of the bond bull market, but it's got to be now. I got to look that up.
And Dean, are you back now?
Yeah, I think I'm here.
Okay.
Man,
we're talking about
my PC totally locked up and went went sideways on me. I had to reboot. Sorry about that.
That's all right. We were just talking about SPY. So if you have any thing you want to add about that?
Yeah. Boy, what a nice bull market we've been in for 8 years, huh? Yeah, SPY has been going up. It's put in, new record highs the last several days, including today. But again, my trading style, I do not chase trends. So too late to get in on the index. There's still plenty of stocks to go long on. I showed one earlier, a CLR. No, I showed SLCA. CLR is another one I'm long on. But in terms of the index, I'm not. It may go up another 10%. Who knows? But it may turn around at any point. And we can tell when it's confirmed to have turned down, but we don't know what the top's going to be. We can't project that. I heard as I logged in some discussion about bonds. I do see a short setup coming on the 30-year ETF TLT.
Yeah, I see his name. Cool. Looking at it right now.
Yeah,
looks pretty
I don't
bad.
know if that's going to show up on the list, but TLT is getting very close to a pretty nice short.
Yeah.
A continuation.
I'm thinking we've got to scrap our government bonds for the next 10 years. I'm guessing. I don't know.
Wow, well, that's bold. Maybe David, if you could bring back up the list. I'm still rebooting here and getting everything together. What's the next on our list here?
BAC, Bank of America.
Bank of America. Boy, the financial stocks, the banks have been on fire. They've been on a great trend. Someday they're going to correct. Do you have any? I think we're still. Are we at the top of the order? Or we can just start with Oliver on Bank of America and see what's the news and what should we be looking for there?
Yeah, we had there was a huge option block here traded back in July that kicked off another nice up move here, but again, it's running out of steam. And you had plenty of time if you look at the time and velocity analysis to get in on that. Even after 10 minutes, just 0.18%, and it has gone up over 8% since then.
And all-time highs, or at least for the current last couple of years, new highs going in on Bank of America. Man, yeah. I'll wait for my turn. Neil, what do you got there on Bank of America?
Yeah, I would buy it. We actually bought this right before the election last year. Got a huge move on it, maybe 35%. But
right.
It's a buy again. I just want to look at the market cap real quick because I always want to keep that in mind. Market cap 272. So you got to think to yourself, well, what's the biggest market cap Bank of America could get to? And Wells Fargo, I know it's a lot more. No, it's not more. Wells Fargo is 275. Bank of America 272. Citigroup, 200. Okay. Yeah, no, I would buy it. Buy the breakout. Go for it at higher interest rates. And then here's the thing: I don't know if it's called the catch-22 or what, but people think, oh my God, higher interest rates, market's going to go down. No. At this stage, it just gives more confidence in the economy that you can raise rates. And I did some research a while ago that from here, rates can go up a full 200 basis points without really affecting the economy or the market. So we could have a lot of rates going up and things will still be okay, I think, for these couple of years. I'd go for it.
All right. So Neil's long on Bank of America. Jim, you got a... What do you think?
Well, the financials, had a big run, then they pulled back, and now they're back on the bicycle. So since they're on the bicycle now, you don't want to step in front of them.
All right.
And they got a pretty good base on that. Bank of America was in a base of about 22 to 25 for a pretty long time. So if this base is a breakout to the upside, it could have some legs in the months ahead.
All right. So we got about 5 minutes left. This would be a good time. Let's go ahead and just go back one more time around the table and just any closing thoughts on the market. If you got a special link or offer you got going on or another trade you want to share, this would be awesome. So Oliver, maybe just wrap it up with some closing thoughts.
Yeah, sure. For the past, 12 years, we've been analyzing over 10 million news events here, and the behavior hasn't changed. It's still, the long setups that were long setups 10 or 12 years ago are still longs, and the shorts are still shorts. So volatility obviously will have an impact on how rapid the moves happen, and how we've seen in the examples that I shared, big volume moves, can trigger extended price moves. And if you want to join our next week's training session here to learn a little more about how to utilize news in your own investing and trading, send us an email to support@newsquantified.com, and we'll send you a invite to our next week's training session.
Okay, excellent. Neil, closing thoughts for you?
Yeah, don't ever trade against the bullish percent. You'll be sorry in the long run. And yeah, you can sign up, traderreview.net, get several reports, and get that trade calculator I was talking about. That'll help you position size your trades. And
that's really important. I use a very similar thing. I offer a trade size calculator. We use 2%, but people can adjust it. Limiting, every trade you take can fail, and understand. I think you use the terms right. A tolerable risk. I use it a pain-free risk level, right?
Yeah. Yeah, I have it maxed out at 2%. People seem to, they don't understand, because when I say you risk 1%, they think, oh, do I just put 1% in the trade because theoretically I can lose everything? I say, no. If you get stopped out of the trade, your portfolio is going to drop 1%, And
exactly.
I think it's people think, well, I normally put 5,000 into a pick, but I got this crazy biotech stock that's all over the place. Well, that's when you're putting it in only $1,000 per trade, because your stop point's 25% below, and this other trade, the stop is 3% below. You're going to put in a lot more, so it's real important.
One of the biggest mistakes I see people making is using a fixed trade size and a fixed trailing stop.
Yeah,
I think you need to determine your position size from a stop, which is based on key support or resistance levels, and then calculate again, like you said, whether it's 1%, 2%, not position size, but what would I lose if it hits the stop, if the trade fails? That's that's more important to me than the trade setup, actually.
Yeah.
Okay. Good thought. Jim, you got how would you wrap up here for us?
Yeah, I would just say that Option Professor is in the business of education and giving you the knowledge of how the different option strategies work. And that lasts a lifetime. Trades, they come and go. We all know trades come and go, but knowledge of how to use these options can be valuable forever. The strategies that I've had people try to focus on, for those who are concerned about their equity being way up and maybe it won't last, collar strategies for defense. And then, of course, some people like to use options instead of stops. It gives them a little bit more staying power because they have a hedge on until the option expires, versus a stop that could get hit and then they turn it right the other way. And, other strategies like the credit put spreads that have been effective for the last couple of years have been interesting to be knowledgeable about. Last thing I would say is I have long-term monthly moving averages on the S&P. They're down at 2250. We're up near 2550 by any definition, as I've said on a couple of the other stocks like NVDA and BABA. These stocks are 40% above their 200-day averages. I've been around a long time. These extended prices away from their averages don't seem to last forever, and they have been going on for a while. So if this tax reform stuff and infrastructure stuff and Trump stuff breaks badly, as opposed to the way everyone is betting, which is it's going to break well, then obviously having some defensive tactics on the ready might not be the worst thing to be aware of. So we'll have to see how things break. But if you'd like to get more information on the options, you could email optionprofessor@gmail.com. Okay, thanks.
All right, thanks. It was good to be here with you again, Jim. And again, I'm Dean Jenkins, followmetrades.com. I'm showing my homepage here. It's followmetrades.com. And, you know, a great way to maybe get introduced if you're interested, there's a free newsletter you can sign up for right here. It's called Beyond the Noise. Every week I give a newsletter, give a projection on the key market, the indexes, gold and oil, and talk about some specific trades. So love to have you join and follow along and see if it's a good fit. And I think that's a wrap. Good show. We went through several trades. We pointed out some good ideas after dumping on the original ones, but everybody shared some good trade ideas. And thanks, David, again for putting it all together and having us back here. And go ahead and turn it over to you to close it up.
Yeah, thanks, guys. Great show. Just a reminder to everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Be sure to join us next week for the Crowd Forecast News Show on Monday at 1 p.m. Eastern Time, and then the show, Analyze Your Trade, the next episode of that, next week on Tuesday at 9 p.m. Eastern Time. Neil and Jim will be back next week, as well as a few of the other people we have scheduled are Sam Borgi, Dave Landry, John Thomas, and Stephen Place. So just want to thank all my guests again for this week. Oliver Schmalholz of newsquantified.com. Thanks for being on the show for the first time.
Thanks for having me.
And Neil Batho of traderreview.net, Jim Kenney of optionprofessor.com, and Dean Jenkins of followmetrades.com. So thanks, everyone.
All right, thank you.
Thanks, David.
Thanks.